because they actually have some updates since the last time I showed you them. Um, they now have Stripe integration. They also have yeah, they also have why my computer's being weird. Okay. Let me share. Oh, did we just get rugged? We did. Muted. Okay. You guys can see my screen? Should be working.
I can see it.
Okay, cool. So the first thing is, you can become an operator node. As you can see, 531 nodes currently online. And this is the daily APY, if I'm not mistaken. Because usually if I go or active 100, but you earn the data token, which is their platform token if you do want to start a node. But what I want to show you guys is our website doesn't work. Interesting. Yeah, I'm not sure what just happened. I was on this earlier. Interesting. But anyway, I just wanted to show you guys this because since the last time I showed you, they've now integrated, like I said, Stripe payments and a few other little things into the actual the call feature. They have a chat app or like I guess it's more like comments or something inside as well. So I just wanted to show you how things have progressed since then.
Yeah, Stripe is not playing around with crypto integrations. They are very, very serious.
Yeah, Stripe and MasterCard and Visa, all of them. So If you are into TradFi markets, those are not. I mean, those are pretty good to be looking at right now. A while ago, Mastercard was actually at a pretty good level too to get in as far as being undervalued. I'm not sure where it's at now, but just in terms of how you can have like a crypto beta, I guess, in the public markets. I know a lot of people go for like Circle, um, or Coin, but um, there's other stuff too. Visa, Mastercard, obviously the Bitcoin ETFs and all of that. But yeah, so let's just take a quick look at crypto bubbles. On the day, everything is pretty red. But on the week, this is the top 100 as well. Um, okay, Trump coming back with a little pump here. What else we got? Uh, Nothing crazy. Um, Quant. Okay, Quant was 16%. It's interesting. But yeah, a few of these that I want to point out is Tau, Bent Tender. Um, this one is pretty interesting. It's basically has a bunch of different subnets, and actually pretty soon they're gonna stop having Tau inflation paid to each subnet. So it's actually gonna be like stakers will be able to direct where the new Tau that's minted goes, so that it's actually going to profitable subnets and not just because right now all of the subnets are being subsidized. But so the alpha there is like what are some of the good subnets that you can stake to, get some alpha tokens. Um, yeah, but Bit Tau, it's more of an AI play, uh, machine learning type of play, and it's been around since I think they first came out in 2023, so it's fairly new. Obviously, we don't know how exactly this is gonna go. It's very experimental. Um,
What makes Tao experimental?
well, it's only been around 2 years, so you don't have that much data. You only have 2 years worth of data.
Oh yeah. Yeah.
That's all. Um,
Hmm.
it's a novel concept. You know what I mean? So,
But
and they do
but
kind of
there.
follow Bitcoin in terms of like the tokenomics in a way.
Hmm.
Because they recently had a halving, so they have stuff like that.
Okay.
Um, and then, like I said, with the subnets kind of going from everybody gets tiled to only the best, most profitable subnets get rewarded, you know, that's going to change the game. So, like I said, the alpha really is in what are the good subnets that you can stake your tile to. Um, yeah, and get those alpha tokens, and you know, a lot of money has already been made on that, and will continue to be made on that. So if that's something you're interested in, definitely look into that. I have an allocation. I had one for a while before there was really even, um, a lot of subnets or really anything really super, super going on to the way it is now today. Um, yeah, just interested to see how it goes. But yeah, like I was saying, it's only been around 2 years, so that's sort of your risk. Um, the next one is going to be Hyperliquid.
We can't see your screen, by the way.
Oh, okay. Uh, Definitely share. So Hyperliquid, definitely another good one. Up, you know, 34%. I really feel like this. No, it wasn't. Was it down there? I think it was a little further, but somewhere around here was like really the bottom on hype. I got in this LP here as well. Hype USDC, as well as Hype Bitcoin. That has been very good. Um, I can kind of just check it out for you guys. Project X.
So Hype is its own blockchain,
Yeah, Hype is its own blockchain with its own stuff going on over there.
so it has
Uh,
nothing connected to Ethereum or nothing.
um, at an engineering level, kind of, but yeah, it's its own blockchain because it's built off of the Ethereum virtual machine. Do you get what I'm saying? So it's
Okay.
not like a Arbitrum or an Optimism, but it is leveraging parts of Ethereum.
Okay. Mm. So with like Rabby Wallet, would you be able to hold Hype in Rabby Wallet, or would probably need another wallet?
Uh, let's just go over here and go to Perplexity and ask.
And the screen went out again. I don't know if you did it on purpose or it just went out.
Yeah, I was just trying to find Project X and show you guys, but let
Oh,
me just
okay,
type
okay,
this in
okay.
real quick.
My bad, my bad.
No, you're good. Uh, oh, does Rabby support? Yes, Rabby does support.
Okay, cool. Because yeah, Rabby basically any almost any EVM blockchain can support like base chain and yeah. If you don't know what
Yeah,
Rabby wallet is, it's a hot wallet for any EVM um, blockchains. So not just Ethereum, also all the companies, the blockchains that work with the Ethereum chain, the system. So yep, it's one of my favorite wallets for sure.
yeah, me too, me too. I like that. I've been using Control a lot. And yeah, those have been my main two right now. I am testing out two other wallets. With a more of a uh like privacy sort of leaning focus to them. But yeah, those are definitely my main wallets. Uh, and just BT Dubs. Um, like when we say wallets and stuff like that, some people get it confused. Your money is not in the wallet. Your money is on the blockchain, and the wallet is the interface in which you interact with it. Right? There was a time before there were wallets. Um, that's why like most of the people who like were OGs in this were kind of very technical. Because at one point you had to be. I mean, you still really kind of do. um, but you can get by with not being technical today more so than in the past. Um, but anyway, yeah, your money is never in the wallet. Your money is attached to the private key. The private key is really the only property that you have, right? The private key represents a particular account, so to speak, on the blockchain where you can then access your funds. I always like to point that out because new people think their money is in the wallet, but it's all about the private key. And that's why the saying is not your keys, not your coins. All right, so what I wanted to show you guys over here, Project X. So this pool still kicking. Good God Almighty! Look at that liquidity. Juicy. Okay.
That's a crazy amount of volume, though. I'm not gonna lie.
Right to
100
liquidity.
M's.
What?
Yeah, 100. Yeah, that's. I haven't seen a volume like that
Let's
in a minute. I done
let's
seen like
add
60, 70 million, but I haven't seen
15.
100 million in a
All right, let's
minute.
do 15.5 mil in liquidity. And oh, can I spell today? Liquidity and 24-hour vol. What was it? 126 mil. 0.3 million. What is the all right, let's see. Bro. Is this drawing token weighted now? It's no way. All right, let me do it again.
Someone had a question in the comment. Is that why it doesn't really matter what wallet you use as long as you can interact with the ecosystem of your choosing and it's secured, you're fine? Regarding your comment on the wallet, I think
Yes,
yes to that
exactly.
question.
Yes, that
Yes.
is perfectly exactly summarized what I'm saying. That's why it doesn't matter if you use MetaMask, Rabby, Control, um, Rainbow, I mean, I could just keep listing 20, 30 different wallets. What's the one with the cute little dog on it? I can't remember. I like that one too. Well, Tom Wallet. So the thing about it is, um, when everything first started out, you really had just a handful of blockchains and that were really being used, and each ecosystem kind of ended up developing their own wallets. Um, and you'll see that today, like you're saying, there's Ton. Yeah, there's a Ton wallet that was developed specifically with the Ton ecosystem in mind. Like Phantom Wallet. Phantom Wallet is now EVM everything, right? But Phantom started out Solana only, SPL only. You know what I mean? So it was built um with a particular ecosystem in mind. And with that being said, you could create a wallet, software wallet, um, with just the Bitcoin ecosystem in mind. It only supports Bitcoin, right? There are wallets like that out there. Same thing for EVM, Solana, so on and so forth. But for these wallets, the money is in the swap fees. So the more chains, the more swap fees. So, it's better to support more than less. Especially like Bitcoin, like, it's not too much real activity over there. But yeah, to answer or to go further on your comment, yes. In terms of, oh, you meant in terms of quantity. Okay. Okay, that clarifies. Yeah. Yep. Was that clear for everybody?
Yep. Yep.
Yeah, so just kind of to conclude that, yeah, it doesn't really matter necessarily what wallet. Especially today there are a lot of really, really good, like, do you trust the software is basically the first part, right? Because like I was saying, when this all first started, really what there wasn't even a software wallet. Like it was just command line and paper wallets and like um yeah. And because most of the people kind of involved were technical and believed in the vision, they ended up building out wallets, desktop wallets, software wallets, right? Just like, for example, hardware wallets. There was a time before there were no hardware wallets. And just remember, treasures can be hacked, especially the older ones. Ledgers, you know what I'm saying? Certain things can be hacked. So always keep that in mind. It's about the private key, and it's just a device holding your private key. And like you can go on YouTube and type in Bitcoin wallet hack. This is white boy Joe something, and he does that. Um, so yeah, you could just boot up a USB and encrypt that John, and that's your hardware wallet. You can use an old Android phone, completely wipe it, and use that as an air gap hardware wallet. So always keep that in mind as well. Like this is just stuff built by other people, and there was a time before people built the stuff, and we were just using whatever. Um, but it's great now that we have all these different options. You get to use what is better for you, which is kind of like what I was saying with the control wallet. I've been using that a little bit more than Rabby, um, just because I like it a little better. So it's just up to you and what fits your preference and style. I definitely would say like Rabby is pretty like Rabby or Rainbow, for beginners. Control as well, um, but a lot of people use Rabby. Just in like the way it shows you some of the data and stuff that you're reading, it can make it because you always want to make sure you read the transaction when you're signing it. And like if you can't get the call data on a particular software wallet, then it's not really that secure or safe. You're trusting them a lot. But let me get back to Project X. Bro, there's no way I gotta sign in to keep using Perplexity. Fuck that. Let me just type this shit into. What I want to show you guys is just how insane the liquidity versus TVL is on this. So what is it? 15.5 mil liquidity. I think it was like 120.
$126. 126 mil.
Okay, 126. All right, share this tab. Assuming it's a 0.0, 0.05 tier. It's giving me all this. Okay, this is what I was looking for. Pool return versus liquidity. So yeah, 0.4% a day, daily. That's basically like, so is that what it's quoting over here? Yeah, so that's just about what it's quoting on Project X. So what I wanted to see is what is vol. Okay, Volume to TVO ratio measures how much trading activity a liquidity pool generates relative to its size. So the trading activity of a liquidity pool, right? Relative to its size. So in other words, it's showing you how much that liquidity pool is being used for trading. Sheesh. Yeah, that's why it's crazy. So this is a 8.15 oh shit. Yeah, this is an 8.15 vol to TVL ratio. You know, typically you're looking at like 3, 2, uh so 8. As you can see, you know, it says right here above 5, extremely high, rare, very lucrative. Very, you see that part, right, guys? Very lucrative.
Mm,
Because you're basically getting 8 touches on your dollar per day.
mm.
Think about it like that. So like
Wow.
I was saying, 1 to 2 is healthy, 3 to 5 is strong. So typically you're going to see like, you know, 2 to 3, 2, I would say 2 to 5, really like 2 to 4.5 on like, you know, an average. So right now this pool is kicking it. Absolutely kicking it. Daily return almost 0.5%. And this is all real yield, right? This is not. And then it says usually not stable long term. Yeah, of course, this is going to go down. Or it could go up. Always keep that in mind. But you know what I'm saying? Like right now, hype is really getting a lot of volume, people, a lot of eyes on it. So it's very likely that this goes down. Because, like, when hype was like $33 or whatever, I was over here looking in this jump was at like 70%. But now it's doubled. So you're making double your money. Or you're making double than what you just were making. But what I really want to show you, uh liquidity
Do you mind if I
price.
see that equation real quick from Perplexity? I just want to take a look at that.
Daily
That's it.
return. Which
Um,
one you want to look at?
for the number that it got, the 8.15.
Oh yeah, okay, yeah. It's
Okay.
just vol divided by TVL. So this is
Okay.
the
Okay.
formula, everyone. You guys,
Okay.
you know what I'm saying? You can do your math in your head. I just wanted to show you guys and have chat explain it a little, like what that means.
Okay.
But the simple way that I like to explain it or think about it is how many touches am I getting on my dollar?
Okay.
The more touches on my dollar, the more money.
And the total value lock, that would be the pool liquidity, basically, right?
Correct.
Okay.
Correct.
Okay. Ooh.
And then again, how to interpret this. I like that it broke it down like this because this is exactly how I would look at it. Like, you know, you want at least two. You want at least two on the ball to TBL ratio. Obviously, it depends on your strategy, what you're doing, and everything, but at least two. Otherwise, it's like, what are you even doing it for? Especially if there's a permanent loss.
Mm.
Um, so what I want to show you guys, I gotta figure out how to. I was just looking at this though. Volume here. Liquidity price. Doesn't show you. So I want to see is all right. Yeah, we'll look at it right here on Deck Screener. That's probably better. This is gonna show what I want to show. If it will load. All right. Show market cap. I'm gonna show price, not market cap. You guys still with me? You can see my screen.
Yep.
All right, cool. just look at it on the daily. Oh, there we go. All right. So the first thing is just zoom out a little. So right here, you guys can see this period. I wish I could zoom in some more. Here it is. Oh, not that much. All right. Collapse that. Okay, that looks better. So what I want to show you guys this for is I'm going to show you guys the range that I was doing or that I am doing. And so right here, you can see on February, like the end of January, the beginning of February, you see how much that volume spiked, right? And it's kind of died down now. And then the way the volume was here, it's almost comparable to how it was back here in the end of September. And my point in showing you that is because it's timing the market versus timing the market, right?
Okay. Okay.
If you miss, some of the best days in the market, um, give me 1 second. Post chart. I've showed this before, but it doesn't hurt to show it again. So this is the value of 10K invested in S&P. If you invested all days, you made basically a 6x on your money, right? $64, $64,000, I should say. If you missed 7 of the best 10 days took place. Oh wait, 7 of the best 10 days took place in the bear market. So if you miss the 10 best days, you get half of that. Does that make sense, everybody? So if you were invested all the days, you got basically which was like a 6x, $60,000 or $64,000. If you miss the 10 best days, just 10, that's cut in half to just under 30K. Okay, you missed the 20 best days and you're at 17K. And you missed the 30 best days, you're barely at break even. You only made what's that, 1100 yeah, $1,700. If you missed the 30 best days, you only made $1,700. Think about that. And then, you keep going, you basically made no money. You missed the 60 best days, you completely halved your money. You started with 10K and now you're at 42. And by the way, this is why a lot of people don't do well in crypto, because they get in and then they miss all the best days because they panic. Because look what it says here: 7 of the 10 best days took place in bear markets. You got to pay attention to the data. My dad always says the number one problem in decision making is the lack of good data. So I'm giving to you guys here. Don't miss the 10 best days. And definitely don't miss 30 because you barely break even. And you want to be in the bear market. Why? 7 of the best 10 days took place in the bear market. Back to this though, right? Just do a quick range. Oop, that's a line. I'm looking for. Yeah. So obviously this was like the bottom down here 20, but I got in like 28, 27. This one. And my range is, and that is measure. That's about 30%. 30% wide. Oh wait, no, 70% wide. Excuse me, 70% wide range, which would be like 35% on each side or something like that, which is pretty healthy. I heard some messages. That's a good chart. Yeah, yeah, yeah. It's something you should print out. You definitely want to print that out, and yeah, take that to mind. Let that sink into your head. Um, Also, there's a video on YouTube. I'll try to find it later. It's really short, but it goes over a similar um premise that, you know, if John puts in 10K at the beginning of the year and Susie puts in, whatever that would be broken up into monthly increments each year. If Tony does dollar cost averaging, and if Sammy only buys when the market goes down, right? Well, the person who put their money in at the beginning of the year probably is the one who ends up like making the most money. Like, it's about time in the market. You know what I'm saying? You want to try to buy the bottom, which is nothing wrong with. If you have, like, for example, at the beginning of the year you could put in $5,000, and you can know over the course of the year you can put aside money to buy the dips. Do that instead of just waiting for the dip. Obviously, if things are at all time highs, nah, you want to wait for a little bit of a pullback and everything. You don't want to get in when everything is euphoric. And if you ever seen the Wyckoff distribution, let's see. It's not a good one. I'll just use this. But you have accumulation, markup, distribution, markdown, whatever. But the main thing is like, um, when you have that complete markup, when you are in a period of euphoria, like that's probably the only time you don't want to buy. Other than that, you want to get into the market. And I'll show you guys this one more time just in case you want to take a screenshot or whatever. Alright. Text screener. So yeah, this was the range. Still in range, kicking it. And if you look at it from a weekly, I mean, look at that at a weekly. You're like, when are you're barely going to be out of range, right?
Oh, it's not showing that page. It's just showing the timing of the market.
Oh, okay, yeah. Let me switch over. Can you guys see Dex screener now? Yeah. Okay.
Hmm.
So as you can see, like December to January, it was out of that range, which, like, okay, but then it shot back up. So you could, drop this down some if you wanted to capture more of that, but you know, somewhere around there is pretty good, like a 70-80% wide range. And the reason why I'm saying that is, let's go back over here to Project X. Let's do liquidity. Go over here. Oh shit, I just did all that and I realized how to find it. Here it is. This is what I was trying to show you guys. This is what I was trying to show you. Look at this. And look at this massive volume right here. This is where you would have made all your goddamn money for the year right here, type of time. You know what I'm saying? It's like when the Super Bowl comes to your city. You know what I'm saying? So, yeah. But let's keep it going.
So with this platform, Project X, I just saw that they basically like let you swap with any coin, and it said for no fees. So they're kind of like a nice in between, like a bridging platform or just for if you want to go from one chain to another chain. You know what I'm saying? So yeah, good platform because I use this platform called Symbiosis.
Oh, they let you go
But
cross chain on here?
yeah,
Are you sure?
wait, do they? Oh wait, maybe not. No,
Oh
I
wait,
thought they did.
yeah.
Yeah, yeah, they do. Yeah,
Okay, so they must be using something in the background because they are not cross chain. So that's interesting though. That's smart. Um,
yeah.
you never know. They might be using symbiosis in the background. I'm familiar with that.
Oh, okay, okay.
Yeah,
Well,
yeah.
it might be
I'll just
cheaper than
pull it up.
Symbiosis to use this platform.
Yeah. Well, you know me. I always tell you guys shop around. Shop around. Just
Yeah.
because one person is quoting you this or they quoting you that, shop around. Shop around.
Hmm.
Cause you'll be surprised. Like you might um even if you're not working with a particular large size or whatever, it still doesn't matter, right? Like if I'm going from one platform and they're quoting me, and I'm gonna lose $5 in the swap. The next one is quoting me and I'm gonna lose $20 in the swap. The next one is quoting me and I'm only gonna lose $3 in the swap, or going cross chain or whatever the case may be. Doesn't it make more sense to go with the $3? But you only gonna know that when you start price matching, when you're shopping around. And then again, when you are working with a particular size, it doesn't matter. But even small, I feel like it's still every dollar counts. But yeah, this is symbiosis. This is what Quay was talking about here. Can swap, move to any chain. Wait, what's that? They have one zap liquidity. Okay.
Yeah, because I heard that like a lot of bridging websites kind of like lead to a lot of loss in funds and stuff like that. So I've been just trying to use platforms that just do the cross chain swaps and no more bridging
Yeah, I
specifically.
don't. Yeah, because I guess exactly what you said. Maybe I'm a little traumatized, or maybe just based off of what I saw. I never really lost money in bridges or anything. Because early on I was always doing swaps because you got to remember I come from like a Bitcoin and a Monero and a proof of work um era, and in that era, like I mean there was cross chain, but you didn't. It wasn't called cross chain. You know what I mean? You had Monero and you got Bitcoin for it, and you had Zcash and you got this for it, or whatever the case may be. Um, so I've always used platforms like Simple Swap or Houdini Swap or Symbiosis or whatever that platform was at a particular time versus bridging. That's more new to me. Like I still don't really do that ever.
Yeah, like with these platforms, it's kind of no point in bridging with Symbiosis and now Project X. Like there's no point.
Yeah, and
So
so what I just wanted to show you guys is you can see in this one you lose about, what is that, 0.12, or actually no,
that's
I guess
just
it would be
two.
less than that.
Oh yeah, just 2 seconds. No, less than that. Oh,
Yeah,
yeah.
it would just be like point
Point Z.
zero 0.02 ETH in
Yeah,
this swap, right? Going from Arbitrum or whatever. So that's what I mean in terms of looking at this, not just the dollar, but also the tokens. How many, especially if you're moving like ETH or something non-stable, you want to look at token amount. How much am I losing in a swap, right? We can just do Tron to and just see, like if I put 1,000 Tron, right? I would, so that's even like less than, it's like less than $2 almost, or it might be like $2, something like that, right? So that's not terrible. So just kind of pay attention to that stuff when you're swapping. Even just if you're on the same chain swapping, always pay attention and always read the transactions before you sign them. Please, please, please. Oh. All right, let me go back here because what I wanted to show you guys. But thanks for showing me that though, Quay, because I never paid attention to that. So that is useful information. That I can kind of just go from ETH.
yeah, and it says
Like,
zero fees. It says zero fees too.
Well, let's see how real that is.
Maybe put the slippage all the way down to zero too. And see if I
Yeah, well, I would never use 2% slippage unless the transaction didn't work at first. So I don't know who's doing
facts.
2% slippage.
Exactly.
That's another thing to watch out for, guys, right down here in this corner. You'll see this basically on every platform for the most part, slippage. Sometimes you gotta crank it up though because of what you're using, like exotic pairs or something that doesn't really have a lot of liquidity going from this to that. But yeah, always be mindful. And you see this like circle thing right here? This is how long you have for this particular price in this swap. So if I do it right now, boom boom, then it stays. You'll see it will refresh. Or maybe, oh yeah, there it goes. I was about to say maybe not, but yeah, there it is. So that's actually, well, you see it just moved, right? You're getting, I
Yeah.
think ETH might have just went up. That's what it looks like. ETH just went up. So
Okay.
yeah, that is really interesting. And that was a good note though, because like I said, I never paid attention to that, but that's very useful now. Actually, let me see. I wonder if they go to, let me just check this out for my own purposes. They do. Perfecto. They go straight to Bitcoin. That's what I need. Perfecto. All right, because I'm in this pool, right? And as you guys can see right now, it's quoting about 80%. But I will show you the range.
But with the wallet you're in it, like if you're using what's the wallet you said you're using? What was it called?
You
Does
can use Rabby.
but Rabby won't allow Bitcoin. You won't be able to hold the Bitcoin in Rabby, right?
Right. So let me see. Control.
So yeah, like how would you even accept it? Or unless you
Well, you
do
just
it
send it
from
to a
another,
Bitcoin wallet.
right? But then you'll have to, how will you deploy the Bitcoin into the liquidity pool?
Well,
Or
this
would
is
you?
a different Bitcoin. This is Bitcoin on Hyper. So this is UBTC. So
Oh, okay.
yeah, you just swap it for that.
Oh, gotcha. Some of the platforms, I know Symbiosis lets you do the swap and then send it to another wallet. I haven't personally done it because I'm kind of cautious of doing that, but
No, yeah,
I
yeah, you
know,
could definitely do that.
yeah.
Something else, Houdini just came out with a new feature, Houdini Swap, that is, for those of you unfamiliar, where you can now basically fund your wallet privately using that same mechanism right there. You funding new wallets privately, like so. Um, yeah, but I've done that before, where I'm going from this on this, and I need to get it to that wallet. I've done that, but the Houdini feature particularly, it allows to be no nexus or connection between wallets. It's always about the on-chain verifiable connections. Always remember that. What is on-chain verifiable? And how does it connect to the centralized exchange? And how does that centralized exchange connect to you purchasing here? And so on and so forth. Or how does it go from the centralized exchange to such and such wallet to such and such wallet? But if you do Houdini, you can go from the centralized exchange to wallet A and then go to wallet B, which is completely untethered. There is no nexus, no connection, no on-chain verifiable connections. But all right, so let me just show you guys this range. I just wanted to show you what it was quoting. So oh wait, can you guys see? Yeah. So that range, which was like kind of more on the low end, as you can see, you're capturing this more on the bottom side than the upside. But this is doing an estimate of 60%, right? Or 50%. Let's say it ends up being 50%. Well, let's go back here. Over the course of a year, how long has it been in that particular range? So you have here to here. It's so imagine you could have been in this damn near 300 days. 300 days printing, absolutely printing, and you would have made, and you would have got those that highly liquidity or that high volume period. But my range is actually like here. It's like right here. It's more like right here. All right, something like this. So like 60 to 7%. But again, that's still gonna be pretty in range most of the time, even if we go back to the chart and where was that at? Deck screener. Oh wait, I just realized you guys can see that. So this is my range. It's about 28, 27 something to 50. Right? So about 50, 60% wide range. Estimated 60 to 70% APR, right? It's not bad. Not bad at all. And I got it to 50 because I kind of want to capture up to 50 upside more so than the down. I mean, if I have to rebalance, I rebalance, but I like that range. And I just wanted to show you guys the hype BTC one because if you are bullish hype and bullish Bitcoin, absolutely lovely pool right here. So I want you guys to look at that, right? That's on a whole yearly basis. You could just be in this fat range, caking 50, 60%. Hype and BTC. Then, what Quay just showed us, you can come take that UBTC and you can get Bitcoin for it. Just like that. Send it to your next wallet.
Ah, I get what you're saying now. That's pretty dope because you're gonna get the payouts.
Yeah,
The
in
payouts.
actual
Yeah.
BTC.
Right.
I mean, you're
That's how you
losing a
can
little bit in
fund.
this, so but you know, like I said, you would have to shop around to see if this particular like is this one gonna be the best one.
Yeah, yeah. But it's convenient though if it's all on the same website.
Exactly. Very, very convenient.
Yeah. Mhm.
Very convenient. Uh, and oh wait, I just realized you guys can't see this, but I'm in Control Wallet and it does have native Bitcoin, so I just wanted to double check that before I told you guys that. But yeah, it does support native Bitcoin, so you could does it support height? Let me see. Does not support height. That's the only thing. Oh yeah, because I think I am using Rabby. But yeah, um, with that, Quay, I will kick it off to you so you could do a little technical analysis for us.
All right. Sounds good. Sounds good. All right. About to share my screen real quick. Give me a second.
And I'm gonna drop Project X in the chat just in case any of you guys want to check that out. Either the USDC or the Hype Bitcoin. I especially like the Hype Bitcoin one, especially right now because you can I forgot to say this part, but you can gain, or you can benefit rather, is what I'm trying to say. You can benefit from not only earning the fees, so you're in this fat range and you're still earning like 50 to 70%, killing it, and you're earning in hype and Bitcoin, absolutely killing it. And the hype and Bitcoin are kind of going to move together sometimes. So, you might start out with a principal of 10,000 and do no compounding and end up with a principal of 20K, 15K because of the price appreciation of both tokens versus being in hype USDC where your um your gain is more muted because you're selling into USDC versus selling into Bitcoin.
Mm, dang.
So, yeah, being in crypto pools are definitely very, very valuable.
And that's good for the bear market too.
Exactly, exactly.
Yeah. Now, of course, what if when we're in the bear market, we can get lower prices, but it's still a great way to accumulate. Just like how you were saying, you get those payouts in the Bitcoin, and you can swap them over for the real thing and send them over to your wallet. So even if it goes down, it's still a great way to accumulate during this time.
Yep.
Yep. All right, so we're gonna take a look at these prices real quick. First, we're looking at Bitcoin. Okay. Now the daily just closed, so that's why it's saying down 0.2% for the day. When actually, I think we're down like 4% on the day. Because if you 20 about yesterday, price was around 74,000. Now it's down to 71. If y'all have been on these calls before, I talk a lot about support and resistance. As in this weekly support, it's looking like 70K is a good weekly support. Rose all the way up, had a rejection around 76,000. So it seems like that 75, 76,000 is the resistance, whereas the support is 70K. This on a weekly basis. If we look at it on a 1 month, got a little bit of a different story. The bottom support is around 63,000, 62,000. That's the absolute last support on this monthly base. But on the resistance, also still looking at around uh around that 75K area. So basically we're just marking the highest points and the lowest points, and that is how we identify support and resistance. And then let's zoom out 6 months. We're down 38% in 6 months. So on the 6 months, we're looking at around 110,000 as a resistance, 120 in that range, all the way down to around that 60, 63, 60 area. So that's pretty much how Bitcoin's looking. Things could definitely touch back down to 60, 63 at any point. It's still a strong support. But if we can get over like the most immediate sell off, which was around that 89 to 80,000 range, then it'll definitely be looking like that support, that 60K support is long behind us. But as of right now, anything can happen. Anything could definitely happen. Yep. Yep. All right. So now let's look at Ethereum. Gonna look at that. All right. All right. So also Ethereum is probably down around 5% on the last 24 hours. Yesterday it was trading around $2,300. That seemed like a nice resistance up there around 23. Almost hit 2,400. Now it's down to around 2,200. But the weekly support is looking like straight 2,000. Pretty much 2,000. That's a strong support, and that's psychological level. That's the most immediate support. So before you can expect any more downside, gotta make sure the price stays under 2,000. Like if you're expecting Ethereum to go down in the near future, then we must see a break of this support to basically validate that thought process. but it could range in between this 23 and 2000, or it could break above the 2300 and then keep going up from there. So up 7% in the past week. In the past month, the lowest support was around that 1800 area. That was a strong support right there, bounced back from it. And then resistance looking at around 2300. In the past 6 months, down significantly, 50%, all the way up around 4,000. Around 4,000 range was resistance, down to where we're at right now. It's around the 1800. All right, we're going to keep moving. Now, this is basically fundamental technical analysis we're doing. We're not using any indicators, any fancy tools. This is just basic fundamental support and resistance. And, this is like that those other indicators are really just extra. This is very, very foundational. So I just am going to basically like push this to make sure that you can at least read a chart and see support and resistance, even if you don't know nothing about the other indicators. All right, so looking at the total crypto market, which is the total amount of all the money invested in crypto right now, we're at 2.42 trillion dollars. We are up 2% in the past week. As of around yesterday, it was at 2.5. And it seems like 2.5, 2.54 was a resistance, traded around there and then dropped down to 2.4 in the past week. The support is also around 2.4. And then the past month, the deepest support, the lowest support was basically around 2.17, 2.16. Let's just say 2.2, as a strong support. Uh-huh. Yep. 6 months. Okay, 6 months is also, yeah. 6 months ago, the market was at 4 trillion. So literally, yeah, almost dropped 50% for the most part since then, almost, so around 40% the past 6 months. Um, but if we want to look, the most immediate level to look at if we're expecting more upside is 3 trillion. If we can get over 3 trillion, things are potentially going to be looking up. But and stay above it. Let's say stay above it for about a month, because that's another thing. You gotta price might hit it and stay above it for a few days, but when you're zooming out on these longer time frames, like 6 months, if you're expecting a sustained uptick in price, I would look for this 3 trillion to be sustained for over 1 month. If we can be over 3 trillion for more than 1 month, then I could definitely see a scenario where going to continue to uptrend, get over the 4 trillion, and then beyond. But if that might not happen, then we could go back down, or it could just consolidate and range until it's ready to do the next move. However, if we get another break under $2 trillion or under $2.2 trillion, then that could definitely leave the door open for 2 trillion, and then under there. You know. All right, let's keep going. I'm gonna look at Ave real quick. Ave's been, my opinion, a pretty good buy, because normally its price action is like very, very volatile, but since everything's been going down, it's also been trading very low, very cheap. Um, you see 110 in the weekly being its most recent support, with the support with resistance being around 125 or so, 120. Then let's just zoom out. Let's just zoom all the way out to the 6 month. So we see 6 months ago, Aave was at almost $300, 285. So that's probably a resistance for Aave, 300, with the support being around 110. All
Yeah, and
right.
it's been holding up pretty well given all of the Dow drama and everything. I mean, Dow is
Mm,
also still doing buybacks, but they did cut buybacks a bit. So that is also maybe another reason why it's been not terrible in terms of like it's not at like $70. You know what I mean?
mm. So, okay, you have to educate me on the buybacks because I heard about another story that happened with Ave where someone, I don't, okay, okay. This was a crazy story. And someone basically did a swap on Ave
Yeah,
where
they
they
did a
tried
swap
to
inside.
buy
Yeah.
um like 50 million worth of Aave tokens or something crazy like that. And they did it on their phone, which was also insane. Like they didn't even hook it up to a hardware wallet or nothing. They did this on their phone. And the slippage was like 99%. So they only got back like
A couple hundred thousand dollars
$38,000.
or something. Yeah.
Yeah, no, it was under 100. It was like
Oh yeah,
38,000.
yeah.
And
Yeah. It was like right under 40.
yep, and the owner had to talk about it and be like, "Yeah, we are aware that this happened," and he just went through with it, even though it said the slippage was super high. He just went through with it, and I'm like, who just has $50 million on their phone? Who, who? I don't get it. It just felt like the government. It felt like the government. I was like,
Nah,
who
you'd
is
be surprised.
having
People really are that reckless though.
who
You
is
know.
having $50 million on their phone, bro? I'm still, who Prince, a freaking Saudi prince or some shit? Like that's the only person I could think of who was doing something like that. Like who? Yeah,
Yeah, you'd be
it's
surprised.
really
But yeah, that just
weird.
happened a few days ago. It's been interesting. They've been having a lot of little stuff happening. They had that, then they had the Chaos Labs uh kind of like Oracle issue where a few people were liquidated incorrectly, but the DAO repaid everybody, so nobody lost money. I mean, at first they did, but then when they saw it happen, they gave them their money back and everything. And
Okay.
they're using Chainlink Oracle for that now. It was like a risk management thing they were using Chaos Lab for. Um,
Mm,
then like that situation with the in-app swap, using CalSwap and the crazy slippage.
mm,
And I actually want to say it was a collateral swap, not like a just like a regular swap, but I could be wrong.
okay.
Um, and then obviously all the DAO drama. So
Mm,
like I said, they did cut buybacks, but that's also because they've been earning less fees. So um, they were doing 50 million, and now I believe it's like 30.
mm.
Um, so yeah, but still, even with all of that, Avi isn't at $70. So you know, something
I
to say for
think
that.
that yeah, and I think the DeFi industry really doesn't want Aave to look weak because it's going to make the rest of the DeFi industry look weak. So it's kind of like let's just prop them up before we all look crazy. I don't know, maybe you know what I'm saying?
I
Because
I would have said that at first before all this Dow drama with the Ave will win thing and all that. Now, it's more so like Ave Dow needs to um really rework what it's got going on in its value proposition to token holders and be a proper DAO for sake. And this is by the way why I love Curve. Okay, fully immutable
okay,
governance is VE locked. Mitchell and other Curve team members, devs, VE locked 4 years. Um, who owns the IP? Frax just came out with the Frax one token, one mission proposal where the Frax DAO owns the IP, right? Like this is really really important. What does the DAO even own? And that's really what it comes down to with Aave. Um, as well as I would just say, the way Stani has been kind of moving with things and so on and so forth is very different from Sam Ed Frax. I mean, Sam and Frax is just completely different ballgame. And then, you got Curve, Mitchell, completely different from what he's got going on. And the way the dial works and the value proposition of the DAO. What do they get in return? Because the staking rate has been the same since Aave had 10 10 billion, and now it's at 30 billion, and it's the same. Like, what is the value proposition to Aave token holders? Who cares about buybacks? Where's Rev? Like, um yeah, even like with Frax's proposal and how now they're going to be doing 10% to the VE Frax holders, but at the same time there is milestones that need to be met for increases in rev share and certain things of that nature, right? Like really running it like an efficient DAO is kind of what I'm getting at. Um,
And
and then uh, the last thing I'll say is that with Curve, the amount that VE that goes to VE Curve lockers is, I mean, it's immutable. It's deterministic. And then you have Pendle with them taking the VE off, and the fact that that was even a thing for them to be able to do, and now it's staking instead. Because I've been collecting Pendle from just LPing, and I was gonna VE lock it, but to earn USDT. But now, I mean, I'll just stake it and earn more Pendle with it, but it's not like it's not the same value proposition at all.
now, are buybacks supposed to help because it brings helps the price of the token kind of stay afloat? Is that kind of the purpose of buybacks? Like, what is the
With
purpose?
Aave DAO, it's more about alignment in terms of why they did it. Um, so basically, all of the tokens are in circulation. Another thing is a lot of people are like, "Oh, Morpho versus Aave." As far as what you were talking about is DeFi wanting to keep Aave, the
Strong.
DeFi strong, right? Looking strong. Well, actually, a lot of people have been talking about the fact that Morpho's been taking TVL or whatever. But me personally, I only ever use Morpho when the euro is earning like 5% over there or something like that. I don't really use Morpho ever. I don't like vault curators. I'm not into that. I like straight Peer to pool lending. I mean, it's just different than a curated vault, and it's different risk. Um it's just totally different. So I don't think they're playing in the same field necessarily at all, even for people to say they're competition. Like you could say more so Spark is competition for Aave than Morpho, because they're doing something completely different. Curated vaults. It's not Peter Pool. But where's I going with this? I forgot already.
Buybacks.
Buybacks.
Okay.
Right. So how I got into the buybacks is because like a lot of people have been talking about where I was going with the Morpho thing is a lot of people have been talking about Morpho token or whatever, but they have unlocks coming. Aave has none of that. They have you know, different allocations have been given, and they have unlocks tokens that will be able to be sold now on the open market, where they will be fully vested. And in like 100 and something governance proposal, the Morpho DAO has never talked about a fee switch. So I'm not gonna buy Morpho hoping that the fee switch turns on. Like, what's the value prop there? So going back to Aave, what Aave basically they started doing is, I believe it was last year. No, 20. I think it was the end of 2024. But don't quote me on that. It was somewhere around that time. But anyway, to take part of the rev and buy the Aave token, the reason why is they feel like the Aave token is undervalued, and by buying it, at some point the DAO will have increased their treasury, right? As well as alignment with token holders or token that like basically the DAO is also a token holder. You know what I mean? Kind of thing. So
Okay.
that's more so their value prop. Now, for me, like I need a plan for like what are they gonna do with the token? I don't know. I've kind of been in more of a optimistic realist kind of standpoint of they will get it together, but the recent happenings, maybe they won't. I've even looked into the Aave license. So next year in this time in March, the Aave V3 business license will be up, and it will be completely forkable. So I've been looking at that, and doing a VE style lending with their Aave V3. Um, you know, but anyway, that was kind of why they started doing the buybacks, because they had all of this rev that they were basically accumulating, whatever, and the DAO was like, hey, why don't we buy the token with this? And that's kind of what happened.
Mm,
Now, what are they going to do with it? You know what I mean? That's sort of what I need to know. Where is it
mhm,
going to go next? Versus, one last thing I'll say is Hyperliquid, which is something else is doing buybacks, right? So they take,
mhm.
and this is, you can see this in Hype price. This is why Hype price has been going up, comparatively to other tokens in the market right now, is because what happens is all of the perp dex fees and all of that goes and it buys Hype on the open market and sends it to a wallet where there is no admin keys or anything. So it's basically burned.
Ah,
So a lot of people don't realize that. That's actually why I was like, maybe Hyperliquid, I do like this, because the value prop there is, like, I did the math. You know what I'm saying? Like 4 to 5 years, a significant amount of Hype will be burned. So imagine what the price point will be then.
mm, wow.
Like absolutely gone. Like half the supply. Um, yeah, and also Jeff, super crack team, and all of that. So it all aligns and comes together. And Ave is looking a little weak here. I'm not gonna lie to you, it's looking a little weak here. Um, really good tech, but the people who built all the really good stuff are leaving. So you know what I mean? Yeah,
Yeah, very interesting. Well,
yeah,
okay, that's the Alve rabbit hole, but we'll see what happens. You know what I'm saying? Always diversify. That's the main
yeah,
thing. Definitely
yeah. And one
diversify.
thing I'll just say, like Ave smart contracts still absolutely stellar, top tier. Um, in fact, it's the people who made them stellar top tier, who fixed the gold peg, right, and certain things that are leaving, is which is why I'm saying it's looking a little weak here. Um,
Mm,
Ave Labs and the rest of the community, like some really gotta show people, hey, like Ave is still that, because again, like I said, in 1 year that business license will be up. And if you think nobody's already thinking about forking V3, you're crazy. I'm not the only one.
mm, okay. Yeah. All right, then. All right, let's keep going. Let's keep going. I want to look at gold, right? So gold right now has been slumping a little bit. You know what I'm saying? Of course, we all have seen that gold had a crazy, crazy run up. Now, I don't know if y'all saw this like on Twitter and Instagram. A lot of like these influencer stock people or whatever, when the war in Iran started, which was basically like around March 3rd or March something like that. I think the war kind of started on a weekend, and everybody was like, "Oh yeah, like get some gold, get some oil. Everybody's gonna buy it because of the war." And literally, like that next day, like I think it was like a Monday or Tuesday, like it shot up for a day and then dropped. I was like, "Dang, they really rug pull gold." It wasn't like huge, like it wasn't like crypto rug pull, but like I heard people who were not like big, like they were just kind of new, and they were like, "Yeah, you should buy gold because it's about to go up because of the war." And it just felt like it was kind of funny, like just to see it happen in real time. And now we see gold is back under 5,000. Still,
Yeah.
I think it's always a good time to invest in gold, but
It's
it
at a
just
good
goes
level
to
though,
show,
4,800.
yeah, yeah. But
Just look
it
at
just
that
goes to
chart.
show, sell the news. That was kind of an example of like
Mm-hmm.
sell the news, because
Yeah,
I
buy the
heard
rumor,
a
sell
few
the
people
news.
telling me that. Yep, yep.
And it's
So,
actually funny you say that, because sell the news, buy the rumor, right? So I bought the rumor about the war, which was I went long oil on Hyperliquid
mm,
when it was at like 60 something a barrel.
hmm,
And this was before everybody's now like, oh, get into oil stocks and oil Exxon and all of this crap now, right? It's already shot
hmm,
up from like
yeah,
63 whatever to like 98 now, right? So
mm,
you should have been in Exxon way before that. But anyway, um a lot of crypto people, we ended up front running this oil trade One, because hype, you can trade 24/7, so it doesn't matter if it's Monday, Tuesday, Wednesday, 12 a.m. where you at, whatever the case may be. You can trade 24/7. And two, you know, just I just saw where things were going, so I was able to, like you said, you know, buy the rumor instead of selling the news. And I ended up selling the news when everything, everybody was like, "Oh shit, oil and all of this and all of that." I was like, "Oh shit, let me sell." I was gonna hold it to 100, but I got out at like 92. I was like, "I can't do it. I can't do it."
Mm,
But that
yeah.
ended up being like a crazy trade that I made, and I definitely should have went heavier on
Mm.
size. So my lesson is size when there is conviction like that. Um,
Yeah,
Definitely should have went heavier, but got some good stats with that.
that's good. Yeah, yeah. So be mindful of what y'all be seeing on these platforms, on these influencer pages, all that stuff. A lot of the times, that's a sell the rumor. That's a sell the rumor move. A lot of these times. So yeah, but
Yep.
it's still
And also
definitely
just look
let's
and
look
see
at.
if it already pumped. Because, like I said, I've been seeing a lot of people now talking about Exxon Mobil and Chevron and this and that stock. And, like, did it
Mhm,
already pump, though? You know what I mean? So just kind of be wary of that. Like, they're telling you to get in once
mhm,
things. Because, this is just my opinion. I feel like, as far with the war stuff, whatever money you was going to make, it was already made, unless you're a defense contractor or something along that lines, or you about to go, if you're in shipping and maritime and ports, you know what I'm saying? If you're into that, the money's already been
yeah,
made as far as what we could do outside of that, right?
yeah,
But if you are, you got a ship or whatever the case may be, you got security firm or whatever the case may be, then okay, get your money in that. But outside of that, the money's already been made. And everything else I feel like now is just noise. Like the signal was already there. Now everything is just noise.
mm, yeah, yeah. So yeah, so looking at gold real quick, we're down 3% in the month. That 5,400 was a strong resistance, shot right back down. And then now we're looking at a support of around 4,800. Let's look on the 6 month. Yep. So basically, that 55 area was the resistance. And on the support level, we got a few touches of 4,800, like around February. And yeah, basically around February, we're at some 4,800 touches. But back before 6 months, the next support is closer to around, I say around 4K, in between 4K and 3.5K. That's like a solid support. So that's maybe the next level of support we can look towards, around 4K. If you want to, if you think gold is going to continue to go down some, definitely keep your eyes on that. Maybe
Yep.
4.5, 4.4 first, and then go on look at that 4K level.
Yep.
All right. Yeah, yeah. So next we're going to look at
Still up
Bitcoin dominant.
32% on 6 months though.
Oh yeah,
Hmm.
definitely up 32%. Yes, yes. So
Okay.
still, I think it's always a, and we have shown y'all. If you were on the last call, we shown y'all tokenized gold, and we'll probably show some more of that later on tonight. All right, so looking at Bitcoin dominance. Now, I like these charts because it doesn't tell you the price; it tells you what percentage of the crypto market is allocated into Bitcoin. So that's what it means by dominance. And right now, it's at 58.8% in the past week. It's pretty much been consolidating. It's only down 0.86%, so pretty much consolidating in between this 59.5, 58, 58.8 range. It's actually the lowest it's been in a week. In the past month, it seems like a support was around this 58.5 level as well, 58.4, and a resistance was around 60%. Um, as y'all know, the dominance charts don't move as volatile as the price chart because it's not a representative of price, just of who's like which asset has the most capital put into it. But basically, So if you really want to get a more of a gauge, it's because it's not very volatile. Maybe zoom out to the 1 year mark, and over in September of last year, the lowest it would touch was around 57,000. And I think that was around the time where Solana was really pumping. Ethereum was looking good. So the altcoins got a lot of money then. But in the summer of last year, it hit all the way to 65,000. I think that was when Bitcoin really started pushing up heavily, like was making its way over 100,000, headed towards 100, 110, 115 and whatnot, So yeah, if we're at a 60, if basically if we're at a over, I'd say, yeah, if we're at a over 60% dominance level for and holding that for over a month, then it's looking like it's Bitcoin time. You know what I'm saying? It's time to for Bitcoin to really suck up a lot of the market and really get moving. But under 60, these altcoins are definitely gonna be making their gains and whatnot. So that's definitely a level to keep in mind. Is 60%. But and then if you look at it, let's say over 5 years, yeah, in 2022, that had a low of around 40%. Now we might see that again in the near future. Who knows? But I'd say the first levels to look at are around, let's just say, the 60 to 55% dominance levels. Those are the levels to really look at. But in the last 5 years, the low was around 40%. All right, so next we're going to look at the others market. And the others market is all of the crypto tokens excluding the top 10. So the top 10, that's like no Ethereum, no XRP, no Solana, no Binance, no, that's pretty much no Bitcoin. And then I think no stable coins potentially. Maybe I don't know if he use stable coins, but yeah. So it's the ones where the lower cap, 1 billion market cap, 100 million market cap, all that range. That would be like your Aave, your Chainlink, your AVAX, Hype, even all that good stuff. So in the past week, it's up 20.29%. So it also has been ranging in between the 7.4, 7.28 range. In the past month, it's down 3.15%. It had a low in March of around 7.2%, and then had a high of around 7.6 in the past month. And in the past 6 months, it dropped in December, it dropped as low as 6.7%. Now, basically showing that the altcoins were just really getting the liquidity sucked out of them. And people were basically either putting their money in stable coins or they were putting it in Bitcoin because they didn't know what was going to happen. But as you can see from December, well, the level is still down because if we can see, like, in at the top of October, the percentage was around 7.63%. Now it's at 7.38, but still, basically saying that to say it's shot up significantly from 6.5 all the way up to 7.38. So, yes, this level could go back down again, but that was definitely a nice accumulation time. It was kind of like a representation of there was a lot of fear in the altcoin market, with this dominance level being so low. And you definitely want to buy when there's a lot of fear and whatnot. Maybe not just unleash all your capital at one time, but those should be the times where you're gradually dropping money in. Because if you release everything at one time, it can continue going down, and especially if you're in a liquid leverage position, it might not look good. But just having a plan for accumulating in those times. All right. Next, we're gonna look at Avalanche. All right. This one will be considered in the others dominance chart because, as you can see, it's number 22 on the list. Past week is down 1.2%. as we see, had a strong resistance at $10.50. Now dropped back down to the support of around 9.5, now around 9.68 cents. In the past month, up 4%. So was all the way, had a low of around $8.21. Definitely a nice buy around there. And it's been up since to around, like I said, it's around 4.4%. But on the monthly, it's looking pretty crazy. 71% in the last 6 months. So that's definitely a lot. Had a high of around $28, $30. Let's just say $30 as a resistance. And now down to $8.28 for a strong support. So those are the 6-month resistance and support right there. All right, let's take a look at XRP. Okay, see what that's doing. In that number 4 spot in the past week, it's up 5.6%. We were at $1.39 a week ago, shot up to basically $1.60, came back down. Now we're at around 1.45. Okay, on the 1 month, pretty much ranged a little bit. Had a low of $1.28, and then had that high of 160. So the monthly support is around that 128, 130. And the resistance is around $1.60. But on the 6-month, significantly down 50%, 51%, at a high of, let's just say, around $3, all the way down to where we're at now, which is around that $1.20 range. All right. Gonna go through a few more. We're looking at the Ethereum dominance chart, sitting at 10.96%. It's actually up 4% in the past week, showing that a little bit of confidence is growing with Ethereum lately. Okay, and 1 week, that's kind of a lot, for the dominance chart. Because like I said, the chart is not as volatile, so moves like close to 5%. That shows that there's some interest building, with the coin. So we're at 10.5% as a support a week ago. Now a resistance was looking at around 11.3% as a resistance. Now down to 10.96%. It's looking like it's trying to get back over 11%. And in the past 6 months, not 6 months, 1 month, up 6.28%. Literally, let's say support was around 10% exactly, around 10.1%. Then came all the way up to like that 11.19%. So a 1% increase in dominance, basically, within the past month as a support and resistance. But then in the past 6 months, we have been down 19%, from 13 as a high, all the way down to around this 10, let's just say 10% range. So that pretty much, there's still a lot of fear in the Ethereum market, but in my opinion, if we can get back over 12%, then a lot of confidence will definitely start to move in Ethereum's favor if we get over 12%. All right, gonna look at Solana, and then I might look at one more, and then I'm gonna show y'all one other chart as well. Okay, so we got Solana at the past week up 4%. Support was looking at around $86. Okay, resistance at around 97. Okay, so it looks like it's trying to get over that $100 range, and that's basically a psychological level. But support was around 86, doing its best probably not to go under $80 in the past week. But if we look in the past month, it's up 4% because the low was $76. and but now it's much higher than that, trading at 89.90. So that's the monthly support. It's about 76, $75. Well, the resistance is about 97, 90, 96. In the past 6 months, down 62%, with a high of $220, $225, down to a low of, like we said, around that 76 cent range. So that's how Solana's looking on 6 month. And then, all right. So this is the last chart that I wanted us to really, really look at. And this is the Bitcoin gold chart. Now, as we discussed, it's looking like I'm actually going to pull the whole chart up. As we discussed, it's looking like, as at least from the price action of the past week or so, ever since the war kicked off and it popped off, it had a little run up to 54 and then came back down. At least in the past week, gold is kind of in a slight downtrend in the past week. Okay. And this could potentially show that we could be having a flippening, potentially. But it's only, of course, time will tell. But it's definitely something to keep in mind for, because Bitcoin and gold are both assets that hedge against inflation, and just they're assets that go against the dollar. So in that sense, they're very correlated. So it's, in my opinion, they work like how one's moving can kind of give you an idea of how the other might look. So I'm gonna close some of this stuff off. Give me a quick second. I'm gonna get rid of some of this stuff. Hold on, if I can. Trying to find the other thing. Okay, I'm gonna keep the moon thing. Hopefully it's not too distracting. Okay, I'm gonna move that. All right, all right, all right. So this is on a one daily chart. Okay, for um for Bitcoin versus gold. So currently, right now, 1 ounce of gold. Wait, one no, 14.69 ounces of gold can buy 1 Bitcoin as of right now. All right. Now, if we look at this fib drawn literally from September of last year, which was the last low, which is around 20. No, actually, no, that's September of 2024, which is around 20 up to the high, which was basically around when Trump got elected. The high being 40. What's that? 40. Okay. These are the Fibonacci levels that show, where the levels to get back over. So we're well under the $20 an ounce. We're still at 14.67. However, let's zoom out even more. Okay, let's look at this on a 1 week basis. We're gonna look at this on a 1 week basis. All right. So on a 1 week basis, we have a fib drawn from the 2023 low, which was $9, all the way up to 40 again. All right. Now, as y'all can see, each candlestick is 1 week. And we have a slight relief rally, a little rebound forming from this bottom, which is around $12, 12 ounces, 12.2 ounces. I would consider y'all to encourage y'all to watch this level. If Bitcoin can close for 1 week over, well, not Bitcoin. If the price of gold in relative to Bitcoin can close for 1 week over this $16.39 range, because as we can see, I'm sorry, I keep saying dollars. It's really ounces, right? 16 ounces and 16.39 ounces just like as we can see over here in July 2023. It kind of ranged in this area somewhat, and as soon as it got over it, it just went straight up. If we can get a close, a 1 week close above this, then just like what happened right here, we got a 1 week close. This happened in July, no, it's not July. In October of 2023, we got a close, and then ever since then, it's been up. It's been up because when this level goes up, the value of Bitcoin goes up in relative to gold. You know what I'm saying? Which also means that the value of gold goes down in relative to Bitcoin. So you can look at that and as when the basically when the price of gold relative to Bitcoin goes up, those are good times to acquire gold as well because it's basically cheaper. It's cheaper than gold. It's cheaper than Bitcoin, and it's the reverse way. When Bitcoin is going up in relative to gold, you can sell Bitcoin and use that to accumulate gold. You know what I'm saying? And then the same reverse process. So yeah, this is just very interesting. It's looking like we're headed towards this $16. It might not happen next week or it might not happen in a month, but we have no idea when this is gonna happen. But as we can see, based on these last 3 weeks of green candle action, this 16.39 ounces is definitely a level to watch because as we can see in 2023, when that happened, we got to close. It didn't look back and it just kept going. It just kept going. So I just wanted to put that on y'all's radar. Like it could range. It could go to 15 and then come back down to go to 12 again. But from this Fibonacci pair and from the price action that happened in 2023, I would highly consider y'all look at that set an alert on your phone. If we get over that 16.4, things are gonna start looking different. Things are gonna start looking different. But all right, that was pretty much the technical analysis stuff I had. If there are any questions, yes. If you have any tokens you want examined, drop it in the chat. Let us know, and I will pull up the chart on it, and we can identify support and resistance. So yeah, let me know. Let me know. And also, what do y'all think about this gold Bitcoin pair? Do y'all think that we're looking to go back above this $16, 16.39 ounces, or it's just a small little relief rally? Y'all have any thoughts on this, or are you just waiting to see what happens? Let me know. Let me know.
Yeah, I agree with you, Clay. I think it's gonna head towards 16.
Hmm. Yeah. Do you have a idea of a time frame, or you don't know? I mean, no one really knows, but what do you?
No, I don't really have a time frame. Like kind of, I was thinking that the gold would underperform Bitcoin for like the first ish part of the year, maybe more. Um, but it kind of went the other way. But
Hmm.
we'll see how it flip flops or what happens. Um,
Hmm.
yeah, because the metals they're having their own thing right now. Like silver, is moving a little. Um, they're having their own thing right now.
Hmm.
Yeah, see, it's down to 75, so
Yeah. Yeah.
they're starting to break down a little bit, and
Yeah.
we could sort of see that spill over into Bitcoin doing the opposite, maybe going up. You know what I mean? But they
Hmm.
also could just both go down at the same time, and then maybe Bitcoin it decides. Because I was looking at this chart of like it was showing like gold, Bitcoin, um, and the S&P 500, and I think it was the Nasdaq. But basically, like all of that stuff was up except Bitcoin. Bitcoin was kind of lagging, so kind
Okay.
of expect to see a flip of
Ah,
that. They
got you.
lag and Bitcoin outperforms.
And probably other altcoins too.
Yeah,
Yeah.
also you didn't show this one, but I can let me see others. Uh, did you show others Bitcoin?
Oh yeah, let me pull that one up. Is it this one? The ratio of exclude to Bitcoin?
Excluding, yeah, top 10 to Bitcoin. Yeah, that's the one you got up.
Okay. Yeah, I got that one up.
Okay, so if you like, um, what was I looking at it on?
It's on the 1 week.
Okay, this is the weekly. If you sort of look at it where it is now on the weekly, yeah, there you go with a little bit of that zoom out. So if you just look at it, you can kind of see, um, there has been periods where it was lower, right?
Yeah.
Where it was lower than where it is now. But that was kind of like in 2021, I believe that's when Bitcoin is outperforming, and then you don't, then it's basically all before that, basically.
Okay.
It's sort of more so what I'm getting at when you look at it on the chart. Because where it is now is kind of in line. It's just been holding kind of steady here for a while
Hmm.
in terms of like the range, even though it might pop up. It's just been kind of holding steady there. And now it's more like we're looking to see, um basically what I kind of see is it's heading towards, um so we're still below the 200 moving average, but we're like right on 50, and it's heading towards, uh like alts are going to outperform Bitcoin. It's kind of what I'm getting at here.
Okay.
Maybe not in the
Okay.
short term, um,
Mhm.
but as this market progresses, because you got to remember, like they got to print money. There's so much debt. They put in a new Fed chair. They're gonna take Powell out in like May, and put in this next guy who's like, I think he's the son of some guy who's donated or something. You know how that thing goes. You can follow it. It's not that
Mm.
hard with the Trump era. But yeah, so my point in saying that is gonna print dollars, gonna print more money. They have to, um, and that's kind of what we're waiting on is more liquid conditions. Also, I saw this chart of, um, what was it? It was like it was showing when China and the U.S. print money, and they're, um, I think it's like the M2 for both of them, and it's kind of starting to tick up a little bit more. So I say
Mm.
all of that to say, like, we're looking for more liquid conditions. It's, I mean, it could be like the middle of this year, but I really just feel like it's gonna be the end. Mostly because when you look at, midterm years, when you look at
Mhm.
midterm years historically, not the best.
Okay.
For the market generally, not even just Bitcoin. And typically, Bitcoin underperforms gold and equities in a midterm year,
Mm.
around the midterms. But right after that, we could see like towards the end of 2026 is more where I'm looking as far as timeline.
Mhm.
Um, like I said, it could be October. It could. I'm not a fortune teller. I'm just telling you based off of all the data. Right. That's where I get any sort of prediction from, is from the data.
Mhm.
It's not just, magical stars or whatever. Even though I would love, magical star told me something. So, but yeah, just kind of looking more towards 2026, the end, going into
Okay.
2027 for better liquidity conditions for things to really start moving. But honestly, I don't mind if they chop here. And like I just showed you guys, that hype Bitcoin range, I don't care if they chop here and I'm just earning 60, 70% in hype and Bitcoin the whole time.
Mm.
You know what I mean? So I know sometimes a lot of people just, they want the pump and all of this, but I don't know. This is pretty good as far as the way, liquidity has, it's not been super good on every chain. Obviously hype is, has its own situation, but it's still really good fees to earn even on like a gold pair. right, where you don't have any impermanent loss. Um, like I had gotten one around 48, and I'm like back where I had entered in, and I earned gold the entire time.
Mm,
You know what I mean? And if you're holding gold spot, or if you're holding like actual physical gold, or even if you're doing gold ETFs, whatever you into, you know, you're gonna have that depreciative effect either way as gold retraces a little bit or pulls back. I don't know if it's gonna be like a full retracement, but pulls back a little bit, which again is healthy. Is very healthy when you look at how much it shot up, how much gold, silver, platinum have shot up.
mm-hmm.
Then the next metal who really hasn't done much is copper. You know what I
Yep.
mean?
Mm-hmm.
So, if you're looking
Mm-hmm.
for like what exposure as far as metals, copper hasn't really done anything. So definitely, want to get into that perhaps. Um, I think it's at like 450 an ounce or something like that right now.
Mm-hmm.
But yeah, the
Well, one,
metals.
mhm.
Yeah, I was just
Well, I
gonna
would
say like
say,
the metals are probably the thing of the decade as far as outside of crypto. It's gonna be the metals.
mhm. Yeah, I've been hearing that about copper. So I just wanted to also show how this chart is actually this range that I drew with the bottom resistance, no, the support being around this 0.11 range,
Is it still on the
with the
weekly?
top being, this is still on the weekly, with the
Okay.
top being, so I can even zoom in more, with the top being around like this 0.14, because as we can see in 2021, as soon as that close happened, well, it wasn't as soon because it happened a few times before. It happened over here before. But on this second time we had that close above 2021, it just didn't look back. And that aligns directly with this 100-day moving average, which is right
Yeah,
there. So it's
that's what I was trying
like
to get
if we
at.
can,
Like we're looking at that pop towards the 100.
yeah, yeah. And also this 50-day and 20-day also kind of aligns with this bottom support line as well.
Mm-hmm.
So as long as it stays in range of these two, these moving averages and this support right here, it definitely could just get real choppy, in between this time. It already has been choppy kind of since the top of 2025. Kind of
Mm-hmm.
already has when it comes to altcoins, at least. So definitely could continue to play out that way. But another level to look at literally, you can put an alert on your phone right here when this market goes over that one. Let's just say over 1.5, 0.15, then things could start to look real interesting.
And what this is relating to specifically is altcoins outside the top 10, right? So not ETH, not
Yeah.
Sol, not any of those, but outside the top 10. All those
Hmm.
alts, all those very, 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 very many alts, right? Um, that you may be in. Uh, and like we said, and like I said, just that chop. Like I said, it's basically been ranging in between there since the fall, since it fell and everything. And if you can see, like in 2025, even that pop up wasn't that significant compared to 2021.
Hmm.
So that what that means is alts never really had their run.
Yeah. It's
But I
also
think it was just
looking
way
like.
too anticipated, and people were
Mm,
under a lot of people were underexposed Bitcoin. I feel like that was the obvious trade, and then let your alts kind of capture what you can on the alt, but you know Bitcoin was really the trade.
mhm. It kind of, in my opinion, looks like this might be, if this pattern plays out, this might be the longest consolidation pattern since 2017. Because all these other
Hmm.
ones are not as long. Like, if this really does play out until October, this will be the longest consolidation pattern since 2017. Which, a lot of times when things compress and they're just compressed, bouncing in between, the pop up or the pop down is pretty strong.
It's
You
violent.
know,
Yeah, it's going to be
But
violent. A lot of people are not ready for that,
yeah,
and
yeah.
either way it goes, I expect it to be very violent in terms of just a lot of momentum. Is going to be like 30-20% candles in a day, like just god candles came coming out of nowhere, just like you see in what was that, 2021, right? Like it just freaking
Uh-huh.
shot out the sky.
Yeah.
And um yeah, so like I was saying, with just being able to stay in range and accumulate, or whether it's dollar cost averaging, whatever you've got going on, you know, you should have some time to keep that going and really accumulate before that violent uptrend begins. You know what I mean? Because it's gonna come out of nowhere, and you just want to be positioned.
Hmm. Most definitely. Most definitely. Yep. Yep. With that being said, that's what we got for the technical analysis right now. If anyone has any other, okay, someone asked a question. Will that affect if you're going to sell gold jewelry?
Yeah, the prices
Yeah,
of gold. Yeah,
yeah, it will.
definitely.
Hmm.
Yeah,
Hmm.
and definitely look into gold jewelry just as a form of buying gold, right? In the in the East, it's very common. You know, China, just because of things that have happened. India, you know what I mean? It's so interesting because you'll see people of our complexion and culture, you know, oh, I spent $250,000 on this chain and it's all fucking diamonds, and like it's worthless. It's because they didn't, like, you didn't even spend it on metals. Like me personally, I'm just against diamonds. I think they're dumb. And also,
Yeah.
the history of the Boers, and and then how Cecil Rhodes and with all the stuff he started and all of that. I don't want to give no money to that. That's just me. But
Mm,
everybody can do with their money what they want. But at the end of the day, you should always remember that the money is in the metals, not
mm,
the whatever else you put on top. You know what I mean? And the other part is, a lot of people of our complexion, they're getting like 18 karat or below. Like you're not even getting real gold. Like if
mm,
you go to Thailand, if you go to India, if you go to China, like you go to these places, like that's not even respected as gold.
mm,
If it's not 20, 22, 24 karat, 24 is obviously actual pure gold. And then, you know, the rest. But yeah, I always find that super interesting. But yeah, it does affect, when you sell jewelry. Obviously, the price just went down. So if you're getting like at spot prices, you should have sold it like a week ago. um,
mhm,
yeah. But if you're gonna buy gold jewelry, well, now's a good time to buy. So it
mhm.
just depends on what you got going on.
Oh, one more thing I wanted to discuss. Did you see the news article that listed a bunch of coins are now commodities and no longer securities? Did you hear
Well,
that?
one, they were never securities. It was up for debate by the SEC. The SEC wanted to bring suit against them for potentially being security. So that's just the one thing I always want to say, because yes, I have seen this on Twitter and so many people cheering it, but they were never securities to begin with. So I mean,
Okay.
it's cool that the I guess they're saying this in writing, but this isn't even law. This was passed by out of the executive branch vis-a-vis I believe it was Scott Benson or the SEC, somebody who's ever's in charge of the SEC and the
Yeah.
in the C, whatever the commodities exchange is, whoever's in
Okay.
charge of that stuff, they put out this report. Actually, let me see if I can find it on Twitter and I can drop it in the chat while I'm sitting here. But
Yeah.
um,
I don't have my Twitter logged in. Do you want to share a screen and you can pull it up?
yeah, yeah, I
Okay.
got you.
All right. All right. I'm about to share.
Uh, oh, that's what it was. It came out of the Treasury Department, the Treasury Department.
Yeah. And they listed like 12 coins are as commodities. And I kind of think that, these are definitely some good coins to have in your portfolio. I mean, I was already invested in them before this happened, but it kind of told you, it's telling you where the institutional money is most likely going to start flowing to, you know, based off of this.
Yeah, I even saw a post that was like, it was, I think it was the Treasury Department. Let me see if I can find the post so I can show you guys exactly what they said.
Okay.
Okay. So on the SEC, White House. Okay, so it's the SEC. Let me see if I can find it on Twitter. Not the Secret Service. SEC.gov. Alright, let me share the screen. All right, so you can see after more than a decade of uncertainty, which I really don't, it that wasn't uncertain to me or anyone really. It was just there was okay. So when I say that, I say if you have common sense, you know law, you read, the case where it deals with the Howey test. Um, if you know how these systems are operating and what blockchain is, which is a distributed ledger technology, it created triple entry bookkeeping. And outside of that, we have double entry bookkeeping, right, which was created a couple hundred years ago. And before that, there was only single entry bookkeeping, right? It was created in Venice, where all the money stuff, all that stuff happened. Um, But anyway, my point in saying this is it's only uncertain from that perspective. Like when they say uncertainty, they just simply mean the there was no public law that clarified anything dealing with it, right? That's what they mean from that. But when you know what these systems are, they're outside of the US anyway. So it's not a US market, is what I'm trying to say. But yeah, so he says will provide market participants with clear understanding of how the commission treats crypto assets under securities law. Hmm. Former administration refused to recognize that most assets are not themselves securities. So that kind of just basically says exactly what I said. It's just the administration didn't recognize it, right? They didn't put it in writing. They didn't say this as a matter of public policy or public law. But I wanted to see. I think this is it. Dang, why can't I find it now? I don't know. It basically listed like what each thing is, like crypto tools or whatever, not a security, this not a security, this commodity, and so on and so forth. I feel like maybe it came out the Treasury. I don't know, I could be wrong. I'll try to find it. But either way, yeah, I did see that, and basically, it listed, I think specifically, 10 or so tokens, but there were a few in the footnotes as well. And one thing I did want to say is just because the token wasn't listed doesn't mean it's a security. They just listed probably the most prominent tokens. Mostly all of them were L1s, I think, too, except Link and something else. Chainlink, that is. But yeah, Um, I mean, I guess it's good. It's not bad. So we'll see where it goes from here. And this was also on par with what came out of the Treasury about privacy and mixers being a part of the right to privacy and not at all, uh, inherently criminal or illicit or illegal, which each of those have a different meaning. Well, legal and criminal are basically the same, but yeah. So that's just something to be aware of as well. Was that yeah, and that did come out of the Treasury Department, and they, like I said, they basically just said, you know, crypto mixers and privacy and stuff, which is interesting though because they charge these people, but one of them, the guys he made Tornado Cash, took a plea, so I feel like, you know, could have went a little differently. I don't know, but I'm not his attorney.
Are there any crypto tokens that are securities from your perspective?
Um, Not that I could list off the top of my head. Um, so what I will say, I'll say this about XRP, since they kind of, this is what I will say. We already knew what wasn't and what was a security by the XRP case. And I see a lot of XRP influencers. I really wonder if these people are getting paid. I really do. But anyway, um, I've seen a lot of them like talk about it, and sometimes they don't really talk about it within the right context. It it never said okay, basically what that case told us is that Ripple Labs selling XRP to individual investors or institutions and telling them it's going to be used for XYZ banking, this, that, and essentially um being like selling it essentially, right? That in itself was an investment contract because the people on the other side buying XRP from Ripple had a trying to get the exact legal language from my mind. They had a reasonable expectation of profit and that the work that Ripple Labs did would turn into something for them materially, right? Kind of paraphrasing a bit, but you can read the case yourself. Judge Torres, I think she did a great job. It was a great opinion. Um, and it's interesting because they were going into appeal up until uh, I think 2025. I think last year, or it might have been 2024, but I think it was last year that they both dropped the appeal, and they actually ended up paying less than they were supposed to pay anyway. So that's also interesting. But yeah, as far as what is a security is when, like I just said, the example I just gave of Ripple Labs, if they're going to individual people and institutions and saying, hey, we have this token and this token is going to be used by banks and payment rails and defeat Swift and whatever, blah, 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 whatever they were telling them, then those people had a reasonable expectation that Ripple Labs was going to do the work and they were going to make money from that, which is a security. Now, what it did say is that XRP itself is not a security, and this is also comes and it's in tandem with this new release out of the SEC, which is that if um, the so the people who bought XRP and their XRP was an investment contract, if they then go to sell it on a secondary market, it still has investment. It's basically tainted by that investment contract. Um, but the XRP itself is not a security. And this is actually why I always tell people that case basically just told Ripple Labs, hey, stop selling this to individual people and just dump it on centralized exchanges and dump it and do OTC deals and dump it on people. Like, you just have to dump your XRP on people. You can't go to people specifically and be like, hey, buy this because it's going to do this. And that's where I always come in with this. Like, I feel like people are getting paid to talk about XRP because it's the same thing. It's just not Ripple Labs doing it.
Who would it be doing it if it's not Ripple Labs?
What I mean by that is, I mean investors are doing the same. Not investors, excuse me. Influencers are doing the same thing that Ripple Labs was doing. They're going online and they're
Oh,
saying XRP is going to be used by the banks. Buy it.
okay.
Now, the reason why it's not a security when they do it is because they're not Ripple Labs and because they're not affiliated with Ripple Labs.
But you think they could be getting paid? And you're
Yeah,
saying they
somebody.
get paid.
Come
Okay.
on, come on,
Okay.
come on, come on. The game is the game, though. I don't have no evidence of that. Everything is alleged, but I'm
Yeah.
just saying, game is game.
Yeah.
There's no way in God's green earth
Co-
that that many people are talking about XRP. I'm sorry.
And
Like, and
I'm
I'm
like
not saying this
every
to be a
day too.
hater at all.
Not,
I'm just saying it's like common sense.
they talk about it every day, bro.
Every
Not
day,
just
all day, and then everything somehow pertains to XRP. It's like that doesn't even make sense. Like everything, I'm like, this doesn't make sense at all. And like, here's the thing: I had full disclosure, I own some. So, do I want this thing to go to triple 1,000 billion? Yeah, okay. But at the same time, um, all Ripple Labs has shown me is that they were using XRP to fund what they were actually doing at Ripple Labs, which is how these white boys sold. Yo, the way they do what they do, you gotta pay attention. But not endorsing anything or anything, or saying that they did anything. Everything is alleged, right? But you know, well, we do know they sold it as security, right? That's in plain black and white. We got the court case, but they're selling it to other people and to investors, and then they get the money, and then now they can't do that, so now they just dump it, and you know they just dump it. They just dump the token instead of selling it in these one-off deals and stuff like that. And they're using that all that money to fund Ripple Labs and to buy a bunch of stuff and to make products. Like they tried to buy Coinbase. They just bought something else like last week. So, but again, how is that in any way beneficial to the XRPL or XRP? But they have no duty to do anything that's a benefit to XRP or XRPL. They have every right to dump on your head every day. Every month they have an escrow release, but you know what I mean? Um, and I don't say it's the shit on them. I just say it's because this is the reality of the situation. You have to take things for what they are and not what you want them to be. Now, I say all of that, and I'm still gonna say like, um, if like everything they're doing and they have banking relationships and whatever, awesome. Then XRP goes crazy, and this little bag I have is gonna go crazy. But at the end of the day, that's not really what I see happening. But whatever happens, happens. I could be wrong. We'll see. Only time will tell. And one other thing I'll just say on this is, um, they've been around forever, and a lot of people like go back and learn how the Federal Reserve was created, how the first Bank of the United States was created, how these things were created, and it wasn't in the way that XRP and Ripple, like the way that a regular person is going to be able to buy XRP and hold it, and one day it's going to go to 1 billion or like 1,000, I think is the number or whatever. That's just the one thing I always say because, they make that comparison of, this is going to be the new money method, the method of sending money cross chain and cross border and everything. And it's like when those type of systems were created, how were they created? They were created in the backroom deals where the public only found out about it at the last minute. So, just food for thought. But again, I do have some full disclosure, and if it goes to 1,000, that is gonna be a hefty bag, and I'm fully prepared to be like, damn, I was wrong when that day comes, if it comes. How do we get here? Securities, but yeah, I don't really necessarily know what anything else that could be a security other than, like I said, that something in terms of that Ripple case. If whoever has the coins is selling them and promising that they're going to do something, then that's an investment contract. straight through and through. One last thing I will say is on that is study Hex, study Richard Hart. There's a reason why he beat his case and nobody talks about that. And he beat his case so good, where they couldn't even come back without prejudice. They can't come back ever, ever. He beat that case so good. So, if you want to know how to do it and it's not a security, study Richard Hart. It's the reason why Hex, the tokens are the people mine them themselves because you're not waiting on anyone else to do the work for you. Your tokens do the work for you. And by the way, this is why liquidity pools are not securities either. Because you're not looking for anyone else to do the work for you. You're putting your money up and making it available for swaps. It's not an investment contract. And like I was saying, this is why I was saying anybody with common sense already knew none of this stuff was an investment contract. How could Bitcoin ever be an investment contract? Did Satoshi come and tell you you was gonna make money on this? No, he was like, yo, you can mine this on your computer, and people started mining it. Did Balak ever tell you was gonna make money? Did the EF ever come out and say, hey, buy Ethereum, you're gonna make a bunch of money? No. Even when they did the ICO, it was about like getting funds to build a project. And they still didn't even end up with most of the token supply. Solana Foundation, a little bit different. They have a lot of the token supply, a little different. Algorand Foundation, same thing. They had a lot of token supply. But yeah, not a security though.
Got it. Got it. Um, were you still down to look at some tokenized oil stuff going on? I know we talked about that. What do you think about
Yeah. I just don't have my VPN on this iPad because I was gonna show you guys Hyperliquid. That was basically all I really had to show you. As far as actually, I still might be able to show you. I just won't be able to connect my wallet. Let me see.
it? Okay. Because you did that tokenized oil trade on Hyperliquid.
Yeah,
Okay, cool.
yeah. You
That's
just
what's-
have to have VPN though.
For it, did you use the Project X website or is it another website?
No, I just traded. You guys can see right here. Can you guys see?
Uh huh.
Yeah, just right here on Hyperliquid. No,
Oh,
just right here on
hyperliquid.com, I guess.
Hyperliquid.xyz.
Oh, okay. Uh,
Yeah, and I just traded it right here. Like, let me see if I can find where I got in.
is this like a Dex?
Yeah, something like
Hyperliquid.
that. Yeah, so I got in like right. It was like at the end of February. It was one of these days. I can't remember exactly which day, but it was one of these days right here. Cause it was after this move. I remember that, but it was right here. And then that shit just crazy. Let's see, how much is it? Oh, not fibs. Let's just take it from the top. Let's say 70. I didn't end up holding all the way. Yeah, so it was like about a 50% trade. Um, with like I think 2 point something X leverage. So
Dang.
yeah, like I said, definitely learned my lesson about sizing trades. Which is something I needed to learn anyway. In terms of just the way I've been trading lately, like when I have a good conviction trade, I really just need to have conviction.
And like, what? How do you know when you need to like have that Like, is it a feeling? Like, how do you
Yes,
know?
literally a feeling. With oil, it was just a feeling. I seen some stuff on Twitter and people talking about oil, talking about fertilizer, um, agricultural stocks, defense stocks. A lot of people talking about Yeah, just in terms of if something happens with Iran and how that would affect all of the oil and all that type of stuff. And I was like, well, we know this is going to happen, so why don't I just go long? And my thinking wasn't, okay, this is going to happen immediately. It was more like, can I survive the funding rate if this takes 2 to 3 weeks to materialize? And I'm like, yeah. So, I got in.
Okay, so the ticker for this chart, you just typed in crude, and that's basically
Yeah, so you can trade um excuse me. You can trade Brent crude or you can trade uh WIT crude. And they're different. Like even if you just go on trading view, they're different and they have a different price. But and as you can see, you could have traded I could have traded this at 20x leverage.
hmm
But I
right.
didn't. I
Yeah,
didn't. Um and
my
it was
opinion.
mostly because again, I was like I didn't know I didn't have an immediate expectation for it to pop.
Uh huh.
I was like, this could take 2 weeks to materialize. You know what I mean? This whole war thing, like it could take 2 weeks to materialize. I didn't have any insider knowledge. Is basically what I'm trying to say. That it was gonna happen within 3 to 5 days.
hmm
I more so was like, this could take 2 weeks before they start blowing shit up.
Yeah.
And also because I had been seeing people in the military talking and stuff like that. So I'm like, little war stuff is in the air. You know what I mean?
hmm
And this felt like one of the most obvious trades. And so many like of us were able to front run TradFi, be able to front run this entire thing just because it was on Hyperliquid and it's 24/7 trading.
hmm Yeah. Yeah. That's interesting. Are there any like tokenized oil or any kind of thing, assets like that that people can you can just hold on to? You know
No,
those.
not that I know of. A
Mm,
while ago I was looking for, this is before all of this, was like over 4 or 5 months ago. I was looking to see if there was any like on chain oil rights or mineral rights, or you know what I'm saying? Something we can get
yeah.
into. Um Really the only thing I seen was like Nest. They a part of their vault is in mineral. Let me see if I can pull it up. Nest. Well, but that's still not really at all what I'm looking for. Like I'm looking for being able to say, like, okay, like how you can have T bills, you can have mineral rights. All right, you guys see this?
Yeah. I see it. Nest by Plume. Is that?
Yeah. So again, I don't have VPN. You can't be in the US for a lot of this stuff. I just don't have it on here right now. And I'm too lazy to put it on here. At least you guys can still see this though. So, oh, they might actually not have it anymore because they did. It was mineral receiver. Let me see. Wisdom credit. Let me see. So this
So this
one.
Nest is kind of similar to like a uh, IR Roth IRA, kind of something like that, but just on chain in a way.
Um, no, I wouldn't say that at all.
No,
This is
okay,
basically just a RWA vault. So,
okay, okay.
um,
Just
I
because
mean,
it's
we
like
just,
diversified, I was thinking.
yeah, so it is diversified, but I wouldn't necessarily say it's like that. it's just an RWA vault. So like this particular one is in T bills, right? Short duration T bills. So if you wanted to have exposure in like, so you have Janus Henderson Fund, right? Theirs is at 3.22 and Superstate is at 3.27. And you can see the different weight. And so if you want to have exposure to both of these, but you're like, why do I need to hold both? I can just have it. I can just be in this vault and get the aggregate yield.
Okay.
So it's more for that. Um Contracts, vault activity. So this one's pretty clear because I mean, Janus and Superstate, what they've got going on. Let me show you another one. And they're actually on, I think Nest. I just seen them on another chain. I was looking at so much stuff. Sometimes I'll be forgetting. I want to say it was on Solana, but don't quote me on that. I'll have to double check. But it was somewhere else where you could get this. It was Nest Alpha. But let's check out Wisdom Tree. Let's see what this one is. And Plume, the token has been absolutely terrible, but this Nest product is it's really good. To say the least, it's really good. My one thing I could say is um you know, you see how it says this wisdom tree, right? Like it tells you the custodian at least and everything, but like then I got to go to their website and find out more information about this. Just from like a user click less button standpoint, I feel like they could just have everything I need to know about whatever this is somewhere on this website. You know what I mean? Like if I had to have a complaint, it would be that just have whatever is included in this website. Tell me what this is on here, so I don't have to go anywhere else. Obviously, still give me their website so I can check them out, but just give me all the info, whatever the financials, all of that. Like just you know. And so this one is basically like their flagship vault. This is the one that was somewhere else. I can't remember where it was though. I do think it was on Solana. But anyway, you can see it's mostly in this Opal vault, the credit card receivables. So then you would have to, well, actually, if we come here, oh, you gotta sign in. That sucks. Well, I'm just gonna show you guys what was in there. I guess let's maybe do this. All right, so this is Latin America global payments financing. I believe this is just Brazil though, if I'm not mistaken. There, because I had did a deep dive on this particular black opal junk. It's very interesting, actually. Very interesting. Um, yeah, Brazil. No. Ooh, let me see. So you can contact them for more information. My one thing is like, I just feel like if you're gonna be using blockchain, like just make as much information as humanly possible. Oh wait, I'm not sharing this tab. Um, make as much information as humanly possible available just on your website. That will be my one complaint with the Nest and the Nest system. Like I need to know more. I want way more information. Like this is cool for a little bit of money, but like if you want, you know, $10 million drop in this joint, then I need more money. I mean, I need more information. But of course, you can contact them for more information. So I'm sure if you contacted them, they will give it to you or whatever. But my thing is just make that stuff available. Something like This website will load. Maybe not. But yeah, I don't know anywhere that you can just do straight up minimum rights um on chain in a real DeFi way, like, you know? So that's still something we're waiting to see. Obviously, we have tokenized gold, real estate, but no real mineral rights. That to me is very lacking. And also farm agriculture, like sugar, rice, wheat, um yeah, things of that nature when it comes to agriculture. Let's do XYZ. Let's do right here. Okay. So other thing I wanted to show you on Hype is they do have stocks as well. If you wanted to trade stocks. For me, I really don't necessarily care, but it is interesting to know that if I want to have exposure to a particular trade, I can. Right? Like if you wanted to short Plantier, you could have.
And you can trade them 24/7. It doesn't
Yeah,
close. Okay. Okay.
Sandix. If you wanted to go long and short. Oh, let's just do TradFi. Then it'll show everything.
So this exchange is not connected to Wall Street then, because they're closed on the weekend. So like this is all within the Hyperliquid system, basically.
Mm-hmm.
Okay.
Yep, exactly.
And will the volume on the could you see a reality where the volume on Hyperliquid or just any other cryptos that trade crypto stocks affects Wall Street as well?
Well, you kind of seen that with the oil trade. We front ran like we front ran TradFi. Like before the futures open, we was already in this job.
Mm, yeah,
So in terms of that, yeah. Um, but at the same time, I mean, yeah, because at the end of yeah, I would say yeah because of that.
because it already happened basically with
Yeah,
that.
yeah, and for the same reason as like Polymarket and the effect that it has, the fact that um you can buy yes, buy no on the war starting on March 1st or February 28th, or you know what I mean.
Hmm.
There's no way you can't say there's millions of dollars going on, hundreds of millions of dollars. Like this one stock right here has 12 million in uh 24-hour volume, 50 million in open interest.
Mm.
And the funding rate, so you could like so annualize is 5%. So right now you'd be earning on this. But
Mm.
yeah,
I'll
so
see.
my point is kind of that like as these numbers grow, as even like on Polymarket, as those markets grow, and the reason why I'm talking about Polymarket and not Kalshi is because Kalshi isn't on chain. It's a regulated prediction market. It's not what Polymarket is. Polymarket is on chain. But anyway, um the more volume you see on these, the more trade volume you see engaging in these particular on-chain markets, it's naturally going to have an effect in the real world.
The on chain is becoming the real world.
Yeah, like it's merging the two at a really fast rate. I don't think a lot of people were ready for. You know, you got indices. You got the Mag 7, S&P, uh, FX. I was on somewhere else and they had some more FX trading. But yeah, just this stuff is in. I can show you guys. If you're into options more than the perps. And by the way, all this trade volume you see that goes to the Hyper EVM gets used to buy Hype token, and it gets sent to that address. Like I said, it's not technically burned, but it is technically burned, in that there is no way for anybody to retrieve the Hype from that address, which effectively means it's burned. All right, let's check out. Oh, it looks like that. All right, so this is Derive. This is like if you're more into options. This is kind of really the only place where you're gonna get good kind of liquidity on options on chain. So let's say I do so May is blah blah blah. All right, let's do June. 99 days from now. I think the market goes out to, yeah, just under 200 days. And let's say I wanted to do a call. I want my strike price to be 100. So if you think it's going to go to 100, I mean, this is at a pretty good $900 for this one. It's not terrible. But let's see. Doesn't show. Maybe if I do. I mean, I must got to connect my wallet for it to actually. But anyway, your break even would be, yeah. And then, so max loss, that's not bad. $1,000 max loss, infinite profit. So if it goes up to 108, what did I do? By June 26th, you could potentially make $7 grand, right? So I don't know. $900 makes $7 grand. I feel like these are some interesting odds. It just depends on, what you think is may happen or whatever. Even, ooh, they want 3 bands for that. Damn. But yeah, so if you guys are into options over here on Derive, you can come over here. I'm not gonna play around with this too much, but
And they do
they
options for crypto and like traditional finance stuff.
over here is just
Oh, it's just
Bitcoin.
crypto. Oh,
Yeah, like Bitcoin E.
okay.
Well, let me see what their perps have. Yeah, the perps is just crypto. But this is more of an options platform. Um,
Okay.
and you can get Derive, that's their token DRV. You can get rewards for um you can get rewards for trading over here, and you could take those and stake them if you wanted to, right?
Okay. And you can use assuming Rabbit wallet or like Rainbow, like EVM wallets. Yeah.
Yep,
Okay, cool.
all of that, anything on Wallet Connect, you can use right there.
Cool.
Yeah, Brave has a wallet, but I've never used it. I don't know if anybody has. Let me know if you like it or not.
Mhm.
And if you are into this, when you stake your Derive, I just wanted to show you guys this. You pay lower fees. So, if this is something you're interested in, come over here. Oh wait, that's not what I wanted to go. Other thing is, you can borrow over here for pretty cheap, and you can use a lot of different collateral. Like, in fact, this is like where you're gonna get the cheapest borrowing rate against hype. Just, if anybody was ever interested in that, it's where you're gonna get the cheapest borrowing rates against hype. But these are the assets that you can supply, and then you can borrow at such a low rate over here, and then you can use that and trade with it if that's what you want to do, or do whatever you want to do with it. Um, one last trading platform. Since I'm showing you guys trading. One of the most underrated trading.
Oh, I think she just cut out. Let's give her a second. She'll come back in. Yeah, some great information. Very useful stuff. You know, definitely looking forward to applying this knowledge and everything. I am also um, keeping a list of a lot of the links that she is using. So if you want access to that, hit me up on Instagram, or if you saw this on Discord, message me on Instagram or Discord, and I will send you the links. Because all the links we've been looking at, I've been writing down, or I made a link for. Do
Sorry,
you
what
see
did you
that?
say? I had
I
got
was
kicked
just
out.
telling the people that I was keeping track of all these links, like with Derive and Nest and all of them. So if they want access, just message me. I'll send them over.
Oh yeah, yeah, yeah. I showed you guys a couple things.
But you were saying you left off with one of the most underrated trading platforms.
Yeah, just if you want to just go long and short, Bitcoin and ETH, it's one of the most underrated platforms in my opinion.
Oh, which one were you saying? Were you saying Derive?
No, I'm about to show you. Let me share screen.
Okay, okay, bet, bet.
All right. So, oops, I clicked the wrong button. Share screen. Okay, now we're back in action. So this is f of x. So like on Hyperliquid, you're gonna pay funding fees, and you might earn some depending upon what you're trading. It might be lucrative to be in that trade because you're actually earning funding fees. You know what I mean? So that's where like what they call like funding rate, like farming funding rates. That's where that is. It's just being in like a perp trade. But over here, basically the funding rate is almost zero. The reason why I say almost zero is because occasionally it will kick in, or like a funding rate will turn on if there is like a lot of volatility or something like that to the downside or something, but it's still way cheaper than Hyperliquid or anything really else, other perps decks that you use. Um so yeah, you can just long and short ETH over here at pretty good leverage. Also, they have a special technology called the liquidation break, and you don't really get liquidated the way you do on other platforms. So that's another reason why I like this, because I don't have to worry about. So let me just show you guys what I kind of mean. But if I do one Bitcoin and I want to do a 3x, so you guys can see this, the price at which your position is rebalanced to prevent a potential liquidation. This will automatically be executed for you by the protocol. A 2.5% bounty will be charged each time the liquidation break is applied. So instead of losing all your money, you lose how much? 2.5%. So it's
Mm.
completely different. You see what I'm saying?
because because it like automatically brings your entry price down or something like that.
Yeah, so it rebalances your position. So now you'll basically be in some stables in Bitcoin. It literally rebalances it. It's crazy good ass tech. You know what I mean? Shout out to Aladdin DAO and shout out to the boys or girls, whoever, was behind this and creating that. But there were some really, really giga brains over at Aladdin DAO. Um and if you want to be a giga brain, you can join Aladdin DAO and they'll teach you a lot of shit. But back to this. So yeah, you could see I could do 3x leverage from right here, and my liquidation break would be at. Oh wait, we're gonna reload. 54. Okay, it keeps reloading. But let's just say 54,700, which is a 23% drop on Bitcoin, and that's when I would pay a 2.5% bounty, and that position would be rebalanced. Now you pay a fee of $651 to start this. But again, you don't really have any funding rate, like, you know? And then of course you can see in your position the funding status off, which it's actually off right now. Like there is no funding rate. And then your liquidation break, how much, you've lost to that, your actual X size, the position size, and then your current size, right? And then your entry price, all of that.
Can you explain the funding rate? Like, what do you mean by that exactly?
Yeah, let me. Did it switch screens? Yeah, it did. Okay. Funding rates on perp decks that keeps the perp price aligned with the spot price since perpetual futures don't expire. Funding rates push traders to bring the price back in line. When the perp price is above the spot, market is bullish, longs pay shorts. When perp price is below the spot price, market is bearish, shorts pay longs. So what it means by shorts pay longs is the basically you're paying a funding rate and it's going, so you're paying a funding rate which would be negative. Let me pull up Hyperliquid so you guys can see what I'm saying. The funding rate on there is actually positive. Let's choose one that is negative. Okay, so Sol looks like it's negative right now, or actually it's, yeah. So you see annualized would be like negative 2.5%, and so you would get paid to be long is essentially what it's saying. Was that the chat?
You would be paid to be long because the market is bearish.
Yeah, so market is bearish, shorts pay long. So you're getting paid to be long because what it wants to do is because the price is below spot price, by you going long and you're buying, you're bringing the price up, which is more in line with the spot price. Does that make sense?
Okay, yes. And where is the spot price located? Like, where can you see the spot price compared to the perp? Because I'm assuming the perp price is the price you're gonna see. Like, I didn't even
Do you see
notice.
this on Hyperliquid? So
Okay.
this is spot and this is perps.
Oh, spot kind of refers to like when you trade like the swaps. That's kind of spot is kind of like swaps. Would you say?
Yeah, spot is means you're literally just holding it in its spot. You're not 2x leverage, you're not short, you're not long, you're just holding whatever
Oh,
the asset is spot. So if you bought Apple stock yesterday and you just have it in your brokerage account, you're holding Apple stock spot. Now you can open up a
okay.
call option against it. You can open up a put, or you know what I'm saying, and then that changes what you got going on. But if you're just holding Apple stock in your brokerage account, you're holding spot. If you bought Bitcoin today, and you're just holding it. You're holding Bitcoin spot
Mm.
in its spot. That's what it means.
So let's see the perp price of hype in the purse price of spots, just so I can see the difference, right? What's this
Yeah,
say?
so you can see 41,417. Okay, it's kind of jumping, so it's a little, but you see now this one is lower. Then we go back
Okay.
to perps. It's way, yeah, it's lower.
So the perp
So
price is lower.
the no, the perp price, excuse me, the perp price is higher. So if we go
Okay.
back to
Perp price is
chat,
higher.
when the perp price is lower than the spot price, shorts pay longs. Market is bearish.
Okay.
So
Okay.
again, to say it again, when perp price is above spot price, yeah, when perp price is above spot price, longs pay shorts, right? Because the price is too high, so they want to pay people to now come in short to bring it down
Okay. To the spot price.
to the spot price, exactly, and then vice versa. When the perp price is below the spot price, then they want to pay longs. They want people to buy it because so many people are shorting it, is drawing the price down. That's why it's below the spot price. They need people to come and buy it so it can be more in line, and you get paid to do that. And so that's where you know, funding arbitrage or um farming funding fees comes into play. Like for example, I don't actually think I had brought this up before, but the JLP position, right? Um,
Mhm.
so I can bring that up. JLP on Jupiter. Let me see if I can find. Let me see if I can pull this up real quick. So this is something that like crypto firms and whatnot actually do is farm funding fees, and traders do in this market is they farm funding fees. So you could get paid to be short, you could get paid to be long. You know what
That
I mean?
sounds
It
like a
just
good idea.
yeah, no, it really is a good idea. And you create a bot to do it. You know what I mean? That sort of thing. Um, it hasn't necessarily been my thing, but I do understand it.
Mm.
All right,
And
so excuse
and are
me.
they and are those people that are doing that? Are they even worried about making profit on the trade, or are they just collecting that funding rate or the rate that the system is paying them? You know what I'm saying?
Yeah, so sometimes it's both. Sometimes you can be in a trade and at first, you know, it might be in a position where you're negative, you're paying funding rate, or you're like neutral, you're not paying anything, or you're getting paid. And um then like for example, if the some for some reason the price of Bitcoin was below the spot price on such and such DEX, right, on Hyperliquid, let's just say, if the perp price is below the spot price, right, then shorts pay longs. So say you went long Bitcoin and you're getting paid to be long, and let's say within a short time frame, or like let's say you're doing this over a certain amount of time, but within that time frame Bitcoin does go up, but you've collected $200 in order to be in that position, and you've only been down $100, let's see, right? So you're net positive $100. And let's say at this, then one day then Bitcoin goes up, and now your trade is actually in profit, and you've already earned $200 in funding rate fees. You've earned $200 in the funding rate fees, and now Bitcoin's going up, and your long is now up $500. Well, you could just exit that position and take the 500 you made from the trade and the 200 from the funding fees. You know what I mean? Or it could be a situation where you stay long and you just earning the funding fees, and the funding fees outweigh the money you lose on the trade, basically, and so you're looking to have kind of a spread.
Mm.
So it can
Okay.
go both ways.
Wow. So this is on Jupiter. Jupiter also has this as well.
Yeah, well, you can do perps on here too. So
Oh yeah. Okay. Okay. Okay.
that's where the wait, dang, what did I just do?
Oh yeah. You gotta accept.
That's where the money from the JLP comes from, because you're the counterparty to the traders.
Right.
So like you can see 75% of generated fees from opening and closing fees, price impact, borrowing fees, trading fees of the pool, uh traders profit and loss. So if they win, you lose some money. If they lose, you win some money. Now, my point in showing you this is what I was getting at here, is that like some of these firms and just people have opened up uh a strategy on not Hyperloop, excuse me, on JLP, where they go they're in JLP. Say you're $1,000, right? Which means you would have, wait, yeah, $440 in Solana, right? Because it's by the weightage. You would have $8 of Ethereum exposure, and you would have 15. Wait, is that right? No, you would have $150 of Bitcoin exposure, and then $320 worth of stable coin exposure, just off $1,000. And so basically, what they do is they take these weights here that you see, Solana, Bitcoin, ETH. They take these weights and then they short the equal amounts, right? So that $150 in Bitcoin, they go short $150. They go short um $8. They go short $440, right? And this is actually more of a delta neutral strategy, but they're delta neutral, but the way that they make their money is from the funding fees. And so you basically are getting paid to be short, you know, any one of these assets, right? And the reason why they're delta neutral is that it's they're taking whatever their Solana exposure is, they're going 1-to-1 on the short. So, like I said, if you do $1,000, that would be $440 in Solana that you would have exposure to, and then they go short an equal amount in order to make themselves delta neutral. But the main thing here is, without getting too much into the delta neutral weeds, is that they do that to farm funding fees on the perp dex. So I don't necessarily know what the funding. Okay, there it is. No, that's the borrow rate. I don't actually know how. I never used this, so I don't know how it works. Maybe it doesn't show it until I connect my wallet. Oh wait, I am connected. That's funny. I didn't realize that. Let me see. Oh, okay, that's why, because they use it as a borrow. Yeah, so that's what it would be. The borrow rate is your funding rate, and you pay that per hour. But anyway, yeah, you could do something like that yourself over here on Jupiter. But anyway, I'm gonna get too much into the delta neutral weeds and everything. Oh wait, look, they have it already over here. What I was literally just talking about. Exposure to, can you guys see this? JLP yield, Bitcoin funding rate, Solana funding rate, ETH funding rate. So yeah, you can just do it all in one click. That's so funny now. I didn't realize that. And I was talking about it the whole time. They have this whole new section over here. That's pretty awesome though.